Hello beautiful people, Robbie here again delivering another video not far after the recent one, which makes a change as I promised, delivering more content through this channel. I hope you all continue to enjoy it. So today I wanted to talk about a project which was brought to my attention. Obviously the last video we was kind of looking more generically at the macro on the market, in particular Bitcoin and stuff. So I thought it'd be nice to kind of hone in on a new project for this particular content piece as a result of just being brought to my attention, it piqued my interest. Here with a fresh trim today, so feeling looking good, good time to get on camera and whatnot. This particular project that I'm talking about is called Collector Crypt. For those of you that don't know me, I have like 7 or 8 years as a founder in the blockchain gaming space via building a variety of projects. So this particular project is actually right up my street. It is a collector's marketplace project whereby they are not just, for example, a typical NFT marketplace. They are looking to essentially bring real world assets, as which are trading cards, to or on chain, essentially on the blockchain, which I don't think is an entirely novel idea, but I definitely think that it has picked up in terms of its traction over recent months and the year, since real world assets have become very much of interest and have started to kind of gain traction in narrative, but not without due cause. And I think it's probably critical or important to say, obviously, as I referenced before, being in blockchain, building NFTs, and being a founder in that space, gaining the insights in terms of how and why the market is moving in a particular direction, and having the perhaps authority to speak from experience on the fact that there's a very strong, obviously, move towards tethering real world assets on chain, not just to the tokenization of, for example, real estate or stocks and shares or whatever else it may be, but physical assets too. I mean, real estate is a physical asset, but I'm talking something, an asset class of its own, like real. You could talk about, like, for example, gold being a physical asset, or something more tangible can touch, could be commodities or anything. But actually also within the collector space, such as cards, like trading cards in this instance. And to be honest, when I say it's not novel, it struck me and probably many other people that were within the NFT space at the time that there was a massively untapped market for the utilization of blockchain for a variety of different reasons within the crypto space, and utilizing blockchain technologies for the current or the major brands that are not, for example, crypto native. And what I mean by that is you look at some of the kind of household names like Disney or Nintendo, or Sony with PlayStation gaming and whatever else, utilizing this technology for not just for kind of NFTs in games, but even more broadly with their IPs. In this case, for example, when we look at Pokemon, you can see on the screen here we've got Pokemon, and in 2018 it was clear as day that, well, if you can digitalize these assets in one way or another, then there's a really potentially strong untapped market here for liquidity around these physical assets. And this is what we have here. So kind of rambled a little bit, but I wanted to kind of set the scene, not only in terms of obviously my understanding of the space and kind of in my background, but also the fact that what is kind of happening now, I felt was somewhat inevitable. It was always kind of going to come. It was always a matter of like how and when, and as opposed to whether it would. And this particular project was brought to my attention by a good friend of mine, an associate, and I thought it was worth just kind of doing a little bit of a deep dive on this for you all, because I felt as though there's a really good potential market here, which I think is just going to continue to grow over time, which is tethering that kind of the real world asset value to NFTs, which is what's happening here. So this is a project called Collector Crypt, and they've built this marketplace, this application, which I'll show you a little bit, and they are essentially allowing users to basically send their physical cards in to like a vault, which is stored by the company, and in return they give you a digital token, an NFT, which you can then freely trade and utilize that value without having to, have the kind of logistical challenges of consistently sending these physical assets to have ownership. Your NFT represents your ownership, and again, it's just one of those kind of facets of what's brilliant here is provable ownership via NFTs. So without further ado, we're going to take a little bit of a look into this project and what they are doing. They have a little video here. I think the video is slightly dated. I did have a flick around through the website before. Obviously I came on on video here, so I have a good idea of how it's laid out and stuff. The video itself, I won't play it all the way through. I'm just going to play probably the first minute or so, because it just kind of gives you a little bit of a visual stimuli with respect to how their kind of protocol, their solution here is working. So without further ado, we'll have a little watch of this. Yeah, so the first minute here, it kind of shows you, and on the website as well, it kind of highlights it, so it's not just in that video, but as you can see, you send your cards in. Essentially, they're secured in industry standard ways, PSA, PWCC, and all, which, are new terms to me. I have heard of PSA before. They're then authenticated, obviously by experts, I presume. And then once they are authenticated and stored correctly, then they will credit the ownership of that asset to you in your wallet, and then at that point you're then free to kind of buy, sell and transfer cards, and you're able to kind of obviously undercut market and be involved in essentially a free market for those assets. It's basically reflected as an NFT for you at that point in time. So I did kind of click around here. They've got obviously the marketplace, which I've got in a separate link here. They've got the app and the gacha. Those are the kind of, I guess, the three kind of product lines that they have going. In terms of the marketplace here, it's effectively very similar to the app here. You can click the marketplace to see it without launching the application, which gives you access to different functions within the marketplace. So I actually did go ahead and just kind of link an account here just to kind of give me access into it, just to have a little click around and have a look. It worked really nicely. All I did is I signed in via Google Auth, if you like, to one of the Google accounts I have. Obviously don't use my main one because we're just testing, but I used a Google account and it instantly generated me a wallet. This is obviously low barrier to entry for lots of newcomers, especially non-crypto native people. So I literally automatically generated a wallet through Google Auth of one of my email addresses. So super easy for if you're not like a native crypto user. They also give you the option to connect MetaMask as well, which you can now obviously use Solana on, which is a recent addition. I didn't actually check whether there's also an option, and obviously it's preloading me in now for another provider like Phantom or stuff. I didn't properly process that, but I think there was 3 or 4 different options, so it's very possible. So that was kind of really smooth, that experience. I was quite pleased with that. They've done a really good job there, because there is a lot that goes on the back end to make that happen. I know that because it is a solution that that basically my companies have provided for a long time now, actually, to be honest with you, probably even going back to 2020, 2021 when it was an obstacle then, but it has become smoother and quicker over time, and those guys, it works really nice. You can test it yourself if you want to launch the app and have a little bit more of a look. Once you're in here, obviously you've got your wallet address at the top here. You can deposit, withdraw, and so on. I didn't get too in depth here, but I did just have a little look at depositing. So say for example I wanted to send a card in, I could say, look, I've got one card to send in, I think that the value is $1,000, and then I don't know, it is a Mew, for example. I don't know what's popping up here, but it's a Mew and it's a 2000 Mu. I agree to the terms and then I create, and we've got in some more little pop-ups down here which aren't new to me, but anyway, they didn't pop up before. And then it kind of like tells you about safe shipping, and then about insurance if you want to insure, and then you can go all the way through, and you hit done, and then you essentially then just ship to this address, and you add the shipping instructions which are here, and away you go. Now obviously I'm just doing this as a dummy to kind of see. It's a shipment now created, it's giving me the instructions of where to send it. I presumably you then send it. Once it's sent, they would validate it, and then they would credit that ownership, I believe, somewhere in your profile area here. Obviously I don't have any sort of collections here at the moment because I haven't actually sent any assets, but you can see that the UI is working pretty well. The flow and the onboarding seems really simple and so on. So quite nice there. Just flicking back to the site. So the product in terms of the application, the marketplace, it seems to be working, right? Like I haven't tested it in terms of sending a card myself and whatever, but for all intents and purposes, I'm fairly satisfied that it is functioning as it is intended. You can also see here, for example, if you just want to buy, you can click on the asset here, you can see what it is, you can see what the authentication method here is PSA. You can kind of click and enlarge as well, which is kind of nice, and it'll just give you a better view on it. You can see it's nice and secured there, and then you can also see the pricing. So this is $925 US. I have no idea if that's good or bad pricing. You can see the user, you can see the amount in Sol, which is obviously the chain that they are using, the blockchain that they are using for their token. They also have, which was one of the other things talked about here in terms of the app, is the gacha. Fairly typical that you get this with a lot of cards, right, as we know. This was something else I was just clicking on before, looking at the Blastoise back there. But the gacha is basically like a potluck machine, right? So typically you just open the box, and you are hoping to get a higher value asset than what is in with the box. I haven't tested this. Looks really kind of nice and pretty here. They've got the like Japanese sort of hiragana or katakana there that you can see, and it's so it's branded pretty nicely. It looks kind of engaging and stuff like that. So yeah, for those that are a bit more degenerate and like a little bit of a risk reward, then you've got that option there too. Always kind of can be fun if you're into that sort of stuff. Most games do that in one way or another, don't they? So website, products, look smooth, interface, onboarding, pretty happy with all that, really nice. Rest of the website, the team are visible, always a positive. Before I came on the video, I took a little bit of a look to see if I could find anything about the team. There's only 4 of them on here. I suspect that they've probably got a few more people working with them, but even if not, if there's just 4 of them, they are lean, and that's no bad thing, especially in the current market conditions. Being a founder, I know that it's very easy to kind of grow when you've got pressures from VCs that have backed you to kind of grow beyond just your current status and so on, and also because you want to grow product lines and revenue and so on. But if they still seem to be fairly lean, I do believe they launched about 3 years ago. I'd need to check that, could be 4 years ago. I'd need to double check my thoughts there, but I'm pretty sure that I saw something around that. And I did a little pre-search obviously before coming on the video here. I just wanted to kind of check, specifically looking at like say the CEO and the CTO. Obviously, having them visible on a website, I always think is a positive, but it's obviously important that they are somewhat visible elsewhere, often on social media. So I looked for, I could be butchering the pronunciation of his name here, but Tom, I guess, or Twom. I think it's probably Tom, but Twom from Holmberg, who's down as the CEO here, and I couldn't find him on LinkedIn. Not an immediate kind of necessarily red flag, but if you couldn't find him anywhere else, maybe it would be. But I had a little bit of a Google of him here. You can see here that it does have a presence on Twitter. I don't think this is the same gentleman, but I could be wrong. He's had conversations on YouTube. He's had in conversation on OpenSea. You know, you can kind of see that there's just a bit of a social media footprint here with relation to his name, which is just kind of good social proofing. And they also did an interview with Binance Square. Now, I can't get on Binance Square because apparently we're not allowed in the UK, which is wild, but there we go. I also looked into Dax, who is down as the CTO on the website, and he does have a LinkedIn profile. So if you see this, Dax, apologies that I am just spying on you, but it's for the purpose of content on video, which is free media for you guys, so enjoy, even if I am a small content creator. Anyway, I digress. So he does have presence on LinkedIn, which is great. You can see a work history, irrespective of where it's been, seems somewhat at media, production, and so on. So good for him. I'm actually not sure if this is the, maybe he's down as Thomas, that I couldn't find him before. Let me have a quick look here. He is. There you go. So sorry, I take it back. He is on LinkedIn also, which is, you know, fantastic. He is down as blockchain. I think when I saw before, the only gentleman I saw, Thomas Holberg, was an entrepreneur biotechnology. But it seems as though perhaps that's a facet of him, and not him in his entirely. He's down as the CEO, obviously here, of Collector Crypt, which is great. And then other than team, we should obviously also check whether or not they've got kind of any backers and such. Again, it's fine in today's sphere that bootstrap happens a lot. So it isn't, again, an immediate red flag should they have had zero backers. But it's fantastic that obviously they have raised money, because we can also see the backers that they've got, which will tell us a little bit about them. And it seems as though in February 2023 they raised money. I just quick Google search told us this, and that they raised from GSR, Big Brain, GBV, Funfair, Master Ventures, Star Launch, Telos. There could be more. I am familiar with effectively all of those on that cap table. GSR are a big sized market maker. They have an investment arm as well. Big Brain, Solana heavy, but VC fund probably the biggest, or one of the biggest. GBV, well, actually, believe it or not, an original investor in Chain Guardians, which was the first company that I built with my previous co-founders. Funfair Ventures, aware of. I've been to one or two of their events. Master Ventures, again, similar, actually did invest in Chain Guardians back in the day. That's Kyle Chase, he's a big content creator. Star Launch are a launch pad from my memory, and I do believe I've had some sort of interaction with them. And Telos, I think that they're a blockchain of types. I can't remember. I've definitely heard the name, but I can't recall. Forgive me, Telos. So a good cap table, right? All kind of good credibility and are well known in the space. So again, just supports that credibility factor. So overall, we've got like what seems to be a good solid product that is working, good ease of onboarding, clean website, good kind of transparency around the team, good social proof on the team. They've got a good kind of investor backing as well, and also they've released a token. So we can take a little look at the token on CoinMarketCap here. We can see that they have a 12.5 mil market cap, 1 mil volume, and they have effectively got a 20% supply released. So what does this tell us? It tells us that, you know, even in a relatively poor market of like early 2025, they had a pretty decent launch, because you can see some good upward trajectory here and good volume, maxing out at about 32 cents with a 20 million volume, right? You can see that, to be honest with you, within the space of a week here, let's have a look, so 15th of September to the 24th of September, this here, it demonstrates, some early profits we've taken by the VCs, more than likely, perhaps some ecosystem recovery from the team to prolong run rate. And then another second pump, which is great for them, but effectively a month onwards. So community engagement, token utility, and so on, obviously was demonstrating, you know, good adoption use case perhaps. And then probably if we look from the 15th of September to 5th, 10th of October, we're probably expecting another kind of profit taking from VCs. It's just what will happen. So you can see here, for example, another round of profit taking. Probably after a month of the second vest, VCs would have taken more profit. Then after that, we're looking another month, and by this point, probably more profit taken. 3 months worth of vesting from the VCs would then have brought the token to this price, without a doubt. I would suggest that the VCs made good profit here, more than likely, given the volume being consistently 15 to 25 million for what, like 3-4 weeks. And then it dropping, and even up in here when it's around this 10 million, so on, still decent volume. But then when you get into kind of the 1 million volumes and the price is starting to get oppressed, it becomes more and more difficult for the VCs to be getting like significant exit prices. But they probably, I guess, broke even without seeing the tokenomics explicitly. Sometimes it's on the website. It's less popular to do this these days, given probably lots of kind of regulatory considerations. Most projects these days will refrain from posting tokenomics for a number of reasons, and oftentimes if they did have it on in the early days of launching, they would remove it shortly afterwards, just to kind of remove that regulatory kind of uncertainty around what it means to have that transparent. Sometimes it could be argued as part of a wider campaign that it's been encouraged, been used as a way to encourage people to speculative purchase a token, as opposed to it being a utility token in the ecosystem, not wanted for, just not really wanted for project founders. So what else does it tell us? Okay, I think that tells us that probably the VCs did okay here, and obviously we're going on from September time 2025. Obviously we're now in May 2026, so what, 6 months on? 6 months on, and the volume's still around 1 mil. I would suggest that probably the vast majority of that is not organic, but it's still not terrible volume after 6 months period of time, because even if only 10 or 20% of that is real volume and the rest is used to kind of, for example, and I'm not suggesting anything here, but quite often there's a lot of data points to indicate that the vast majority of volume in crypto tokens is not organic, maybe generated via market makers and so on. Then even if 20% of that volume is real, then 200k a day is still not terrible volume. It allows the markets to be made quite nicely. So volume's still okay, and given the market that we're in, the market cap at where it is at, the volume and the initial kind of launch is not terrible. Holders at around 10k, again, not awful if verified correctly by CMC, which CoinMarketCap, which no reason to think that it isn't. Got a little kind of community of holders there, and it's nothing to be totally sniffed off. So generally speaking, it's an interesting product. It seems to work pretty well. The team seems like pretty solid. They're visible. They've got social proof in. The token seems to have had a reasonable launch. No huge red flags, decent backers. An interesting project for me to look at. I think the big thing that I find super interesting is just the fact that it's linked to real world assets. When we look at where NFTs have struggled, and this is a tale of all the time. When I launched Chain Guardians in 2018-19 with my 2 previous partners, one of the reasons that Chain Guardians was launched is because I was actually quite invested into the NFT community at that time, and also the games. And the games were interesting in the sense that they offered kind of new ideas around value movement and kind of asset value and management in terms of the gamification of the ecosystem, the ability to generate revenue from buying, selling, working hard on your assets and so on. They lacked a lot on the IP side, for example, like in terms of the storytelling, the branding, the artwork, and so on. So when we launched Chain Guardians, the idea was to effectively address these issues, build, create really high quality artwork, write really compelling stories, build an IP and brand, because the intrinsic value of these kind of IPs and brands and such are built up over many years of storytelling and the love that their audiences, their customers acquire for them. When you think about Disney and Mickey Mouse, the rich heritage and whatever else, The same is true with gaming brands or any other type of asset like Pokemon and so on. Is loved because of the connection of the people that love the characters, the Pokemon, and the story that was told. So when we when we're looking at the release at Chain Guardians, it's a case of we recognize that shortcoming. Where this is really interesting is that, and obviously one of the failings was that it's like you're still trying to build this IP and this brand and getting people to fall in love with the stories and the characters, but you're still competing with brands that are 50, 100 years old, got a huge march on you in terms of wealth and like capital and also staffing and so on and resource, and loyalty, fan loyalty. So where this is really interesting and differs, and obviously we've seen a crash in NFTs recently, this business model doesn't rely on creating intrinsic value with storytelling and artwork and so on. It leverages all of the existing value of traditional IPs, in particular, for example, Pokemon. Right? When I'm just flicking through this, you can see that on the marketplace here, the vast majority that seems to be on here is Pokemon. You can look at the tool on the side here that just allows you to kind of curate what you're looking at. Generally speaking, if you just have a flick through here, you can see that Pokemon has got a huge amount of people like kind of buying and selling. 46,000 cards listed on here. So this business model leverages the love of existing IPs, from Pokemon to One Piece to Magic the Gathering, not as quite as large here, but maybe over time. So obviously they've got a huge kind of market potentially going to football, which I think they classify different for soccer, so not UK football as we know it, but as I would know it and anyone from the UK, but I guess they're talking about football, American football as we'd call it. Yeah. So, but yeah, football and or soccer, Magic the Gathering, Pokemon, Yu-Gi-Oh, and so on. And it's kind of like a marketplace model, as in, I'm sure the way that in which they monetize is that I'm pretty sure is that they'll have multiple revenue streams. One will be when you send it in, a fee is probably need to be paid for the storage and the authentication and so on. And then I'm almost certain as well that they pick up a fee on either the buyer and or the seller side. I haven't looked into it. I in terms of they, I haven't researched their business models, but that would be what I would highly likely suggest is the case, so that they're just kind of picking up percentages and fractions at either side of the process. So they're offering this service and they're just picking up these kind of revenues for either side, and it's all completely leveraged off existing IPs that brands know and love. So I think that there's a really kind of strong reason to be quite bullish on these guys, in the sense that they don't need to create that value themselves. They merely need to provide a surface that allows lovers of these different IPs to access the value layer, the kind of the transaction layer of IP markets in new, novel ways. And that's exactly what they've done here. They've essentially gone here, rather than having, if you're somebody that likes to trade and buy and sell, rather than having to physically go to these conventions all the time, which I'm sure people love anyway, but all the time, and rather than having to kind of pay consistent postage and so on, why not just replace that asset, that item, with a digital representation, and it can be moved for a fraction of the price at lightning fast speeds, and you can access that value layer seamlessly at any point in time, and utilize that the wallet system that they are here. You can send it to an exchange and take that off into your bank. Otherwise, if you want to buy something, you bring it off, you put it on here, and you buy what you want. It's a really interesting business model. I think it could grow really nicely for them. Wish them luck with it. It could be a slow burner. I think it would require people to slowly build their faith in the system of how it works. It'd be helpful if they had some kind of current ambassadors inside these IP communities that are going to talk about what they're doing and endorse it, because that might encourage adoption. But I don't see that there's any reason why this couldn't do very well if they put their offering in the right places and are able to kind of generate the revenues that they need from it. It would be super interesting if we could gain access to how well they're doing. I don't know if we can use the token as a reflection of that. Oftentimes, I think generally speaking, they've probably recovered multiple seven figures, maybe 1 to 2 million for their ecosystem treasury without seeing, just a guess, without seeing the tokenomics. So that puts them in good stead. Obviously, then they've got the money they've raised. Any transaction volume they're making will bring them some fees, both in the marketplace and on the token. They've got a low team that I can see, so the burn should be quite low. So I don't see why they wouldn't have at least sort of 5 years run rate at minimum, which is good for them, allows them to grow the business. So yeah, brings me on to last of all, right? Is it a good investment? Obviously, from my perspective, I always suggest I'm not a financial advisor. Everyone should always do their own research. I can only speak from my experience, apply my experience and knowledge to analyze whether or not I think that this token could be a good buy. My general sentiment is, based on all of the different factors that I've explored, that it could be a nice little pickup. It's a small cap. They're always high risk. It is, however, 90% down from its all-time high, which shows that it's already been quite aggressively hit in terms of investors taking profits. It has had a nice little bounce from a low of 2 cents. But I mean, if you look at maxed out at 30 odd cents and it bottomed out at 2 cents, it's currently sat at 3 cents. It's not massively much higher than where its bottom were, which suggests that VCs are probably going to want to allow this to grow before taking any further profits, and also with the fact that they've probably already returned fairly nicely on this in pretty bearish conditions, did want to see it doing well. Volume needs to grow from here. They are as well, I think that they got about 20% released. Let's have a look. Yeah, 19%. From experience, you're probably looking at 15 to 20% of the supply to VCs, though that's from probably old experience, maybe 30%. So I'd love to see the tokenomics. They're nowhere that I can see. I could probably find somebody who could give me these tokenomics, but I would guess that no more than, and I don't mean to provide any uncertainty anyway here, I'm just purely guessing, another maybe 5%, 10% of the supply to come to the VCs. So maybe another 200 million, maybe 100 to 200 million tokens to come out. So probably a little bit more in terms of profits to be taken from VCs, but I wouldn't have thought that there's much longer for these guys to kind of endure before the tokens got a free run at price appreciation, if you like. So in terms of whether or not I feel that cards has potential, I think considering these different factors, quite a broad range of assumptions, granted, that I think that this could be a decent little pickup. I'd always just factor it in to a wider portfolio and thesis, and I'd always factor it in a lower percentage of my holdings if I were to pick it up, given the fact that it is a small cap. But yeah, I wouldn't mind having a little holding of this token, given all of the different facets that I've discussed today and talked about. As always, do your own research. This is not financial advice. This is the end of the video. I really appreciate you taking the time to listen to this. If you've got this far, please do like and subscribe. I'm not great at kind of self-promoting and self-shilling, but it would really kind of help grow this channel, the content that I produce and the frequency of it. So yep, thanks everyone for listening in. Go out, check out Collector Crypt. Thanks everyone. Speak to you later.